Welcome, everyone, to this episode of the Expansive CEO podcast. I'm your host, Hannah Chapman, and this recording is being done on Thursday, August 14th at 1:19 p.m. Pacific time for Investment Friday on August 15th. I am here with my good friend, Brad Haines, the Chief Investment Officer of Juncture Wealth Strategies, and we're going to be talking about some executive orders, some AI data centers. We've got all kinds of stuff that we're talking about today that you've probably heard about in the news. So before we do that, how's it going, Brad? How are you doing?
Good, good, doing well. Yeah, the markets are trudging higher. Today they've come off a little bit, but again, everybody shouldn't expect a straight line higher. So, you know, every once in a while we're going to get these days where the market prices are a little wobbly, and that's fine. That's normal part of business.
Well, and over the last couple of weeks, right? We just had Q2 earnings come out
Mhm.
over the last, several weeks anyway. How did that pan out for most companies?
Actually panned out much better than it was to be expected. There were a lot of companies, in fact, a higher than their 25-year average reported earnings surprises on the upside, meaning they reported earnings that were higher than their expectations. Um, and the number of those, the percentage of those was actually beating the long-term average. So that's a really good sign. Now that said, there's a lot of still uncertainty with the tariffs being applied and the negotiations going on with India and China. Um, and all of those things are coalescing into still some uncertainty and some discomfort among corporate managers and leaders about how they're going to put out their future expectations over the next 3 to 6 months. It's a little more murky for them, and so it's a little difficult for them to come out with really strong forward guidance, which usually drives the equity market much higher based on those earnings, those strong earnings outlooks.
Well, speaking of tariffs, just for a little update there, because it's the 14th, so 2 weeks ago, right, there was a deadline that was approaching that we were supposed to have some more information from China and how all of those tariffs were going to pan out. But recently, just this past week, right?
Yeah.
Trump extended that one again by 90 days. So we're kicking the can
Well,
down the road a little further, right? What else is going on there?
yeah, he kind of had to. The Chinese have kind of called his bluff a little bit, if that's what it is. We right now between China and the U.S., we have a much lower tariff. We still have tariffs being applied, but they're much, much, much lower than the punitive 100 and some odd percent that President Trump had wanted.
Mhm.
And it was related to, okay, we're going to be negotiating with each other and coming out. And unfortunately, I think the Chinese have found themselves in a position that are a little stronger than I think President Trump had anticipated from that standpoint. And a lot of the excess production that would have been coming to the US has actually been finding its way into other global markets. And so the Chinese aren't necessarily super motivated to make a big deal right now. I think that we eventually will get to a deal with them because again, China's dealing with kind of a balance sheet recession where they have a lot of houses, a lot of real estate on their balance sheets that are now trading for less than their mortgages. And if that's reminiscent of 2007, 8, 9, and 10 in the United States, it's almost exactly what's going on. So that said, I think the Chinese government is starting to realize they need to do a little bit more to spur domestic demand, which honestly is good for them. It's good for us. It's good for everybody.
So we're not, and again, I said this a couple of weeks ago too on the podcast that the market really isn't reacting very much anymore to that news anyway. So when the 90-day pause hit, it was like, or extension rather, I didn't see any market reaction from that whatsoever.
Yeah, I think President Trump has, and this happened again in his first term. is the market got used to how chaotic his communication strategy is. Um, and so at a certain point, the markets just stop listening and they just stop. They start looking at actions as opposed to his words. And now his words have kind of turned into more noise within the market's context. But no one's really trading based on what President Trump says anymore. Because it could change the next day to the very opposite of what he was just proposing. So, there's not a lot we can do other than just wait and see to see what actually takes place.
Well, with that, or going for, springboarding off of that, he did sign an executive order, in the last couple weeks as well, talking about allowing 401k platforms, companies, to put private equity and crypto into their platforms for people to be able to choose that inside of their 401k if they want. And I really wanted to talk about this today because I've been seeing a lot of reaction on social media, a lot of articles being written, even by bigger news sources, CBS and whatnot were some of the ones that I've seen. And then also getting, people that I know sending me, different videos of different creators talking about this executive order, being very, very concerned about it. And the rhetoric that they're using is that this executive order will allow private equity firms and crypto firms to go into your 401k and basically steal from you. That's kind of like the headline information that's been the what do we say? The clickbait that's been going out, right? Is like they want to take the money from the middle class, like your last remaining retirement asset. They want to go in and decimate it. Um, and so that sounds really scary. And so that's why people are asking me about it because they're like, "Oh my God, what is happening? Am I going to have, d- am I going to need to cash out my 401k and take all the money and put it under the mattress?" So
All right.
let's respond to that.
Yes. So from my understanding, the executive order that he has signed just says that 401k sponsors and the companies that manage the plans have the opportunity to add private equity and cryptocurrencies to 401ks. Now, I'm going to parse that out a little. Right now, very few 401k plans or retirement plans offer private equity, but some do. So I want to make sure that distinction is clear. Some already do. Okay. But most don't. And the reason why is because the Department of Labor and the SEC co-regulate 401k and retirement accounts. And the Department of Labor, who's the main regulator, has very stringent rules on investment opportunities or options within retirement accounts because, again, they're doing their job as a regulator to protect the participant so that they have that money there when they decide to retire in the future. And so they have regulations um, on the fiduciary standard.
Mhm.
Okay. So just because it's available, your plan may not offer it. Okay. Because they may say, we don't want the risk of having those assets in there. Um, your company that when you sign up and you work for XYZ company and they have a 401k, that 401k is sponsored by your company, but it is managed by some outside investment company. Oftentimes it could be Vanguard, it could be State Street, it could be Fidelity, it could be one of the insurance companies. There's lots of companies. It could be Principal Financial. There's a lot of different companies that offer employee benefits.
Mhm.
So the first thing has to be is those investment firms or insurance firms that do 401ks that offer those plans have to be comfortable enough to include those assets in your offering, have to be comfortable enough to include them in your plan offering. Um, then secondly, your company has to feel comfortable enough giving you the option to invest in those. And then the question becomes is, do they have regulations on how much you can invest in them? For example, if cryptocurrency suddenly becomes available into your 401k, let's say, you're a young, aggressive investor, if you go 100% in Bitcoin, are you allowed to do that? There are some questions there from the regulators, um, that would not be okay. All right. And part of that responsibility is on the part of your company, on the part of the investment firm, and the regulators will try to enforce that. Now, I will say, like I said, currently private equity is available in certain 401k plans, but the regulations are very, very stringent. They analyze the fees. Great. Fees are lower than they otherwise would be. Um, but there's a bunch of other specifications. For example, they can't be levered. If they're levered, they wind up costing. They actually generate a tax to the participant, called an unrelated business income tax from your retirement account. So generally, participants don't like that.
Right.
Okay. Because all of a sudden you're like, how am I in a tax deferred account having to pay income tax? Well, you are, because there's a levered investment in there. And that's the IRS, SEC, and DOL's way of saying, hey, that's really not supposed to be in that account. That's a little bit more safe account relative to other investments you could do. Um, so the same, again, cryptocurrencies, what he said is, okay, let's investigate, the Department of Labor, SEC, let's investigate if cryptocurrencies are a stable enough asset to be put into long-term retirement accounts. We'll see what they come up with. I think it's I think it's years in the offing in terms of that. And then, if we go through a bubble pop in some of the cryptocurrencies, because they've run quite well. I mean, you have a lot of the cryptocurrencies are trading at their all-time highs.
Hmm.
And you have, I think, 9 million different types of cryptocurrencies now.
Wow.
Yes, as opposed to, people can usually name three or four off the top of their head. But the fact that there are and a plethora of different cryptocurrencies out there. Um, so, which ones get offered, which ones don't get offered. So it's just all of that investigative work is what get kicked off with that executive order from President Trump.
Well, the one of the other things that's really important for listeners to know and understand is that 401ks, 403bs, and pension plans, I believe pension plans, are covered under ERISA law, which
Mhm.
is really, really like tight. So it stands for Employee Retirement Income Security Act, ERISA. It was enacted in 1974. So this, goes back 50 years at this point. And it was put in place to protect employee benefits, primarily retirement and health plans that are offered by private employers. So the ERISA laws set standards for how these plans are managed and administered, ensuring participants receive the benefits they've been promised and protecting them from mismanagement or fraud. Why did that matter? Because before that, we were seeing big issues that were leading to exactly what these laws are trying to protect from is that, companies' pension plans or companies' retirement plans that they were offering to employees were being mismanaged, were being over leveraged, were being overfeed basically, right? Like so like the fees that people were paying were like exorbitant, right? Like those things were happening back then. And so in 1974 the ERISA laws were created to protect employees and participants of these plans. So even if you have a 401k from a previous employer, right, that's protected by ERISA law. And it's these are super important regulations and they have been upheld over and over again in court. And so,
Well, in the Department of Labor, when they're enforcing ERISA laws, are very strict. They don't mess around with this stuff. So, like I said, private equity, for example, has already been approved back in 2020 for inclusion in 401k plans. Great. But one of the problems with private equity is they own private securities. Well, private securities, that implies that there's not an active market that can give you the value of those shares on a day-to-day basis. So what happens is you have to have those accounts, those securities valued on an annual basis, and it has to be consistent and it has to be tight because the DOL will come in and analyze the value of those securities if those securities are being offered in the context of a 401k. So it's one of the reasons that most plan sponsors have not pursued that option for their plan participants because it's so much work for what could be a very small dollar amount going to be invested in those assets.
right. And overall, I think the average, the average private equity fund doesn't actually outperform the market either. In general statistics. So they're adding something into the plan that you might not get any more benefit from than, just putting everything in an S&P 500 target date fund or, the like. And so the other aspect that I wanted to talk about here was that first of all, the executive order doesn't change ERISA law, right? So
No,
that's it doesn't impact ERISA. And ERISA will very likely supersede anything, right? Like it would be shocking if something that was in that executive order, if it violated ERISA, if that was then, allowed to stand. Because again, this has been a very important ruling that we've had for a long time. Not that we've never seen that be overturned, but that would be another shocking one. So that's the first aspect. The second aspect is again these private equity firms in general. I think people are less up in arms about the crypto piece, like being allowed to invest in crypto in a 401k. They're not really like they don't see crypto as necessarily nefarious and like trying to destroy things the way that private equity has kind of given itself this reputation over the last few decades. So it's more the private equity that people are freaking out about, thinking that, oh, they want access to the billions of dollars, trillions of dollars in 401k plans. So they're going to go in and take it. And that,
well,
again, it's just not, that's not how it works. Like you choose, you as the participant have the choice what you want to invest in your 401k. You might have limited choices, but the even of those limited choices, private equity is not going to be included in those target date funds or in those like more safe vanilla plain funds.
I mean, at some point in time down, let's just fast forward 5 years. There may be a time, and I know that private equity is working on this type of solution where you have a private equity fund, which typically, again, private equity, once you own a private security in a company, you can't sell out of it very easily.
Hmm.
Well, what they can do is they can create these funds called feeder funds where there is a limited liquidity on the inside where people who are selling can sell to other investors within that fund and vice versa. Okay. Um, it's not fantastic. It's just limited liquidity. It's not like you want to buy in there knowing you're going to sell out within a couple of years. You want to be able to have the mindset, okay, this is a 10-year investment.
Right.
Um, Now, certain private equity funds have done incredibly well. So if anybody's asking, well, why is private equity such a big deal? Private equity is a big deal because historically, up until a few years ago, you had certain number of funds just absolutely crushed it from a return standpoint. And they were the only way to access those level of returns. Now, to your point, Hannah, what you said is the average is not much better than public equities. Okay. And there's a lot of disadvantages to them. So, you know, for private equity to become a main part, I think it's going to be a bit. They've got to work.
Nope, we can still hear you when you're
Okay,
talking.
they got to work through the legalities and the operations of providing that limited liquidity to participants in a 401k plan. Okay. Because at a certain point, people retire and you start to use those monies. And at that point, private equity may or may not have an important role in that account from then on out. It may, but it may not. So there has to be some way to provide the cash to the participant when they start to live on it and start to roll it over into potentially an IRA. Um, that said, um, every investment company that administers and invests 401ks are held to an extremely high standard and are analyzed by the different regulators a lot. So as long as you're with a fairly large name, fairly well-known name in terms of your 401k, you really probably don't have much to worry about. Um, but for I mean, crypto, I think is probably the most interesting aspect of um, being allowed into 401ks because there's really very little backing it other than the ownership of other people who own the cryptocurrency. That's it. That's the only thing that's being decided because all it is a piece of code, right? And that code is everybody's decided is worth X amount of dollars per unit. Um, Whether it is or not, we don't know, and it can change all the time as we see the volatility within the crypto market. It's an extremely volatile market from time to time. Now, there are certain currencies that are maturing quite a bit that their volatility may fall off a cliff as they become um, more akin to a dollar or more akin to, the stable coins that are actually backed by dollars. So it's again that the path of cryptocurrency is yet to be decided fully. I think it's an interesting idea. I'm just unsure of the path that it has within the 401k for a long-term hold. But again, it is what it is.
Yeah, that's the kind of to your point about, the private equity, because I mean, I've had clients ask about that as well. They're the headliners that are knocking it out of the park. And then there's, the other 95% of private equity firms that aren't knocking it out of the park in that same way. And crypto is exactly the same, right? Like we all know Bitcoin, most of us know Ethereum. Um, there are, like you said, if there's 9 million other coins that you're trying to somehow trade your own wallet instead of your 401k on something that's more speculative and is more not necessarily day trader-ish, but when people talk about, hey, this is how I manage my crypto, it's mostly day trading. That's not how 401ks work. They're not meant to be day traded. It's not that kind of asset. And it's not managed that way, and it takes time. I mean, days usually, right? To like, I want to change my allocation here. So you go in on the website and you change your allocation to whatever you want. and then someone else has to implement that on the other side. You don't typically implement yourself, right? Um, with the exception being like when we manage an individual 401k for a client, right? That kind of thing. We can make investments, we can make changes, but we're still not doing that level of trading that typically happens with crypto in general, other than the people who just hold their Bitcoin. It's also a thing. Clients that
Right.
have held Bitcoin for 10 years, like, yeah, hang on to that.
Yeah, good on them. But again, it's a different, so that's back 10 years ago, that was kind of a speculative thing, right? So, and to be honest, I think it's still a bit of a speculative thing. Um, but um, that speculation was placed in the trading account or in the investment account outside of the retirement dollars.
Hmm.
Um, and so that makes sense because that's speculation. And if you did well, great, fantastic. That's awesome for you. Um, but for the majority of the people, participants who have 401ks, they're probably not looking for speculative investments. They're looking for investments that are going to grow to the point that they can make their financial goals when they decide to retire.
Right. Yeah, and that's the other really important thing to, if you're listening to this and you have a 401k, either for your business or you have an old 401k plan or whatever your situation might be, um, to really like give some thought to what you're invested in there. And as a like reminder, just for anyone who's listening, also that if you do have an account that's like, say you had a 401k, I'm going to use this example because it's happened so many times when I meet with new clients. Say you have an old 401k at Fidelity and you go in and you're like, oh, I haven't logged into there forever. I think I have like three things there. There have been multiple times where people log in, we look at their Fidelity accounts together, and they haven't been invested for the last, 5 years. They've just been sitting in cash, um,
And
which
that happens more often than people think.
it's so much. It's so common. So first of all, yeah, like if you log in and you see that, know that you're not alone. It happens all the time. And then also know that you can and should figure out what the right investment allocation is for you. Um, However it is that you want to do that. But log in, check. So if you haven't done so recently, this is your reminder to go log into your accounts, find all your old retirement plans, check on everything. Um, and of course, if you want help with that and want to consolidate things and put it into an IRA instead, we can help you with that. Right at Juncture. Super easy,
Absolutely.
easy peasy.
Absolutely.
But yeah, no, that really truly is. It makes me sad when I see that. Like, oh, missed opportunity.
Yeah, for
Um,
sure.
but I think that wraps up that. But if anyone has any other questions, if they have heard anything else about that executive order and they're concerned, yeah, feel free to write us, let us know, forward me whatever video you're watching, right? Like I get that sometimes too. Of like, hey, what's happening here? You know, so that we can know what to respond to and how to help you navigate these changes better. So one, right now there are no changes to navigate. Everything is just in investigation phase. But two, if you haven't looked at your allocation in your 401k in a while, you should do that anyway. It's just good annual maintenance to make sure that you are looking at that and invested the way that is right for you and your family. What else, Brad? What else is going on?
I mean, that's pretty much it until President Trump gets back from Alaska. Um, President Trump gets back from Alaska. I think he's going to be firing up that Truth Social on the way back on the plane. So we'll see how that his meeting with Vladimir Putin goes, how that's going to impact the Russian-Ukraine war, how that's going to impact oil prices, natural gas prices. What does that do to Europe and their plans to increase their fiscal stimulus by reinvesting in the defense-related industries? Um, we have we have a short, a little bit of a spike up in inflation that people may have heard about. Um, the core services, the core plus inflation rate that is not an official rate, but it's including all the services, ticked up a little bit this week. So still, again, 1 month doesn't make a trend make, but again, it's something that we're watching pretty closely. Um, we've got in the next couple of weeks, we have uh, the next Fed meeting, which will be exciting because that should be the first one where they drop interest rates by a quarter point, which is 25 points or 0.25%. So that should be the first in a number of interest rate decreases. Again, I think the market it is a little too optimistic about how many interest rate decreases that they're going to be, but we'll see. We'll see how things transpire, both in the payrolls numbers, the consumer spend, which again, we've just entered the season of spend. We've got basically August through the end of December is when most people spend a lot of money on goods and services. So we call that the season of spend. And so that season of spend really determines the outcomes for a lot of companies um, outside the technology world, in essence.
That reminds me of one thing that a question I actually had. And maybe we can talk more in depth about this next week. That would be really good. The AI data centers. I said this in the beginning. I forgot to go
Mhm,
back to it. The AI data centers and actually utility companies.
mhm,
Because I have experienced this personally with my own utility bill, and I've been hearing and seeing a lot of this from a lot of people that their electricity bills in particular have been much, much higher recently over the last few months. Sometimes double, even triple what they're used to paying. Um, and we're starting to find out that it's coming from AI data centers and the amount of power that they're using and the, utility companies that are selling to the AI data centers and then upping their pricing for individual homes. And my question in that with inflation, so thank you for mentioning that because it reminded me of that particular question is that going to show up in inflation data? Like if people are paying
mhm.
literally twice as much for their electricity bill, is that part of the CPI?
Yes, that is part of the CPI, both the consumer price index, and it's also part of the personal consumption expenditures index. So both those raising of rates, raising of in utility bills, that increase will transfer into inflation. However, it's not a very big component of each of those indices. So it won't necessarily impact inflation as much as say shelter or
Mm,
gasoline or eating out. Those are some bigger categories.
okay. Well, let's put a pin in that one and we'll talk about that a little bit more next week because that's interesting and what it might do for utility companies in general as well, too, right? Like there's a whole ecosystem of well, things that people invest in and or not, right? Utilities are fairly volatile, aren't they, as a investment category?
Utilities?
Yeah. Or are they
No,
not? Opposite.
they're very generally they're opposite of that. We did have a period. So historically, utilities were traded based on their dividend yield.
Hmm.
So their dividend yield had to be higher than the 10-year Treasury note yield. So if it got too far above that, then people bought utilities. If it got few, a little bit below that, then they would sell utilities. So it was always right around that 10-year yield in terms of their dividend yield. We had a brief period with where we tried to do a secondary market, a free market trading economy in the energy markets. If you remember Enron and all of those companies that got involved in energy trading, they still do that to a certain extent, but not nearly to the scale they were trying to. Um, And so now they're kind of back to the slow grow. But over the past couple of years, to your point, as AI data centers have been built in mass scale and really are increasing, um, the supply of energy is going up, or the demand of for energy is going up dramatically. In fact, data centers right now are about 5% of all power demand in the US. So 5%. Well, it's going to double by 2030. And I would say that's the furthest out before it doubles. So the demand for power from data centers to help facilitate artificial intelligence is enormous. It's growing. It's one of the reasons that you hear these massive numbers being announced for capital expenditures from Google, Apple, all the different companies you would imagine, is because they have to build these data centers um, to facilitate building their algorithms, their AI algorithms. So it's very important.
Well, we will, of course, keep ahead of that trend and paying attention to what's happening there. I would like to talk about that more next week because I totally forgot about Enron. That was huge. It was such
Yeah,
a
that
big
was
deal.
big. That was kind of big.
Um, I was that the late 90s?
Late 90s, early 2000s. Yep.
Yeah, it was like my late teenage years. That was when I was first, like, really first starting to listen to some of this kind of stuff. Okay, so if you have any questions, if you want to hear more about Enron or anything else, let us know. Send us a note, send us an email. All the contact information is in the show notes, or you can DM me on any of the social platforms. Send me a question, send Brad a question, and we're good. Until then, everyone just stay calm. Try not to worry about your 401ks too much. It's going to be okay. And we'll see you next week. Thanks, Brad.
Thanks.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough. You are enough. And your birthright in this lifetime is to be expansive.